Do you think this is a strategy for like everyone, or is there some situations where you say it's probably not a good idea for someone to do that?
It really depends. Um, and what I would say is that for anybody who's trying to figure out how to accumulate maximum Bitcoin, like if that's the goal, then yeah, they should at least understand this method, understand this process so they can make that decision, right? This is ultimately just equipping people with more education, more information that they can use to make that decision for themselves. But for me personally, I wanted to stack more Bitcoin, but I wasn't going to get another job, and my current job wasn't going to pay me three, four, five, 10 times as much money so that I could buy 10 times more Bitcoin. And so this was inevitably the best path and the best strategy I could come up with that allowed me to maximize my allocation without, again, having to get a second job or ask for, pay increases all the time so that I could further my accumulation.
Yeah, it's interesting because, like, if you read, for example, the fiat standard of Cypher, you kind of come to the conclusion you might want to use the fiat to buy more Bitcoin. Of like, okay, Bitcoin is a great solution, and then you wrote the Bitcoin standard, you read the Bitcoin standard of Cypher, and then you go to the fiat standard of Cypher, and you're like, oh, I need to misuse the fiat system to the fullest potential to get as many Bitcoin as possible. Now, it's very hard for me because I purposely decided to just like go the other way around and just like spend my Bitcoin. And this was just more of an emotional and not a financial decision. I just like did not want to have any debts. I just want to be like debt free, and it is very hard because I know how bad the fiat system is. And so I know how good of a decision it is to borrow against your Bitcoin or even get a loan. And I still have a small loan outstanding. I did a small experiment with myself in 2022 where I got a loan for, I think it was 15,000 euros. And I think it was 8 years or something. Like the numbers could be slightly off. I think 8 years, and it was like 3% or 4%. Like it was super low, and I was like, wow. Like, and at that point, I just wanted to try it out and see like what does this actually mean. So I didn't do any borrowing against the Bitcoin, nothing else. It's just like a consumer loan after applying for like 20 loans, and one I got that was really good and favorable. And looking back, this was one of the best decisions I ever took. It was at the bear at the bottom bear market of 2022 and 15,000 euros. I mean, that's just like extremely good from a perspective of how much more money I made with that trade, renting the dollars and like buying the Bitcoin with it over the last 3 years. Like it was like tremendously good. And still, even though my only experience with loans are extremely good and financially good, I I just don't want it. Like it's a weird thing where like emotionally, I no longer want it. And so in hindsight, I just like wish, even though it was a financially good decision, to say like, I wish I have never done it. Now, of course, it's a good thing because like I made the experience, I know about it, and like it's nice. And it also has nothing to do with borrowing against your Bitcoin because it was just like a loan. And so that so I struggle in my head because on the one side I really don't like it, but on the other side I know financially it is in most cases. I mean, I don't want to say with every cases, but in most cases, a pretty good financial decision.
When you apply that to yourself as an individual with a job, and you say, well, the savings in my bank account are earning nothing, and I'm getting no raises at my employer, yet the cost of living goes up 7 to 10% every single year due to inflation. How can I protect myself? And the answer is you can't, right? You have to get another job, or you have to get a raise, or you have to, come up with some other magic formula that for a lot of people just doesn't exist. And, that's kind of at the heart of this is just another way that people can at least explore how could I get more access, more allocate more to Bitcoin in a safe, secure, proven way using tools that are safe and proven, etc. And that's kind of at the heart of this, right? Is for the people that make that decision that say, okay, I want to do this, or at least I want to explore it. Own Bitcoin, Rent Dollars is just a great guide, a great sort of TLDR 15-minute read that covers the basics to help people just learn the fundamentals and know where to go to get more information if they truly want to dig in.
And I want to show a chart because it's really interesting. Also, the risk management of that from the book. It was explained previously, but like, what is kind of this chart showing of the risk level that someone can take within borrowing against your Bitcoin?
Yeah, absolutely. Yeah, and if you scroll up, if you go to the top of that, let's see. Yeah, the relationship between these two. So if you go to, yep. So this really breaks down the relationship between your income and your expenses, right? So let's say you get $5,000 deposited into your bank account every month for your job, right? That's after taxes. Now let's say that you have to spend 2,500 of that every month on your expenses, right? Your food, your rent, your bills, everything. Well, that means that at the end of every month, you've basically got $2,500 in free flowing cash to invest, to buy Bitcoin, to do whatever it is that you do, right? And so the relationship there between your expenses and your income is relatively modest, right? It's 50%, right? You need 50% of what you make in order to live. And so if you were to implement this strategy, well, in any given month, you would never actually be borrowing more than 50% of what you deposited in Bitcoin, right? Because this strategy says buy Bitcoin with all 5,000 of those dollars and then borrow 2,500 that you need to pay your bills, right? That way you've still got the $2,500 that you need to live your life, but instead of only having $2,500 left to buy Bitcoin, well, you bought $5,000 worth of Bitcoin and still have the $2,500 that you need to pay your bills and live your life.
Do you think there is like a future where there are big banks and they only require a signature as proof that you have the Bitcoin and not real custody of saying like maybe you have a service provider, you have a bank, and you have yourself, and each of the three like have one key. So like let's say like there's maybe a Bitcoin exchange that provides such a service. We have the Bitcoin exchange host has one key, then the bank that provides the liquidity has one key, and then you yourself have one key. I thought about that and was like, it's actually interesting because if we want to avoid the bank doing weird stuff with the Bitcoin, the coolest thing to do would be have a key, and so the exchange and the liquidity provider can still collude to each other, like they can still like work together and like take your Bitcoin, but you would know about it.
Yeah, right.
Which is kind of an interesting thing where it brings even like more transparency in there. I don't know if there's even something like that on the market, or if that's even like possible. I don't know like what like liquidity providers and like all of that like they want. But is there something that you see that this could be somewhere future?
Yeah, we talk about this a lot. Because multi-sig for self-custody is fantastic, right? The challenge with multi-sig when you get into a lending scenario is you now have, say, a lender, you have a borrower, you have a capital provider, you might even have a custodian, right? So you've got multiple entities that are now involved in this transaction, which makes multi-sig a little bit difficult, especially if the goal is to remain or to provide resilience and security over the Bitcoin. Because to your point, if the benefit for me using a 2 of 3 multi-sig with, say, Unchained or Theia as an example, is that I have 2 of the 3 keys or 3 of the 5 or whatever, right? I control the transactions, not somebody else. But as soon as you bring a third party interest who's now lending money to me, and somebody has to secure the Bitcoin collateral in escrow or at a custody environment or whatever that is, all of a sudden I no longer have control. So what is the value of the multi-sig in that scenario other than you can see it, right? To your point. And so I do think that the multi-sig will continue to be in high demand for lending scenarios, right? Unchained Capital is a great example, right? They have their own multi-sig vaults that they've built. They also do lending. But I think if you look at, some of the LTVs and some of the rates where multi-sig is being used for security and for custody, right? They're very high. The LTVs are very low, and it's more rigid because managing a loan operation that's built around multi-sig is just it's got less flexibility. It's more rigid. It requires more, you know, uh, cooperation in real time with the key holders. It requires more security and governance around key management. Somebody leaves the company, you have to regenerate the keys, right? So there's just lots of different things you have to do to manage a multi-sig environment at scale. And that is why you see names like Fireblocks becoming so popular because of their MPC wallets, right? Multi-party computation, which is, you can think of it like a single sig, but it's sharded the individual key into however many parts you want, right? So the full key itself never actually exists anywhere for somebody to assemble and authorize any sort of transactions or movement of the Bitcoin itself. So it's an interesting scenario that continues to evolve, and banking institutions, financial institutions learn more about how it works, and they learn that there's really no borrower risk or credit risk because, well, it's an over collateralized loan, right? They give us more money in Bitcoin than we give them in dollars. So if they don't pay it back, well, then we can liquidate the collateral to pay off the loan, right? And so there's really no credit or borrower risk, which is vastly different if you look at like an auto loan or an unsecured credit card loan or a mortgage, right? You've got borrower risk, right? If the people don't repay you, well, then you have to go repossess the house, or you have to chase them down to pay back the credit card, or you have to repossess the car, right? And there's just a lot of additional overhead and work that comes along with that. So that's one thing that I think the capital markets are better understanding. The other thing is the asset risk. Sure, Bitcoin's volatile, but the technology that exists in the lending space is advanced enough to where, a loan that gets upside down on LTV, loan to value, well, the collateral will get liquidated before the loan is in the red, right? So there's really no asset risk for these lenders either. And so as they start to understand this, they realize, wow, okay, the rates in this Bitcoin backed lending space are, comfortably in the double digit range, kind of hovering around double digits, right? 8, 9, 10, 11, 12%. And they're seeing, well, okay, there's really no borrower risk there. There's no credit risk with these borrowers, and there's really no asset risk because of the automated technology that will preserve the value of the collateral that's backing my loan. So the only real risk vector there is the counterparty, right? The actual lender, which would be, say, would be us, the company that's doing the lending, or perhaps the custodian that is overseeing the security and safety and custody of the Bitcoin collateral throughout the loan term. But again, I think as more people within the capital markets are understanding these things, they're going, okay, wow, that's a better business model. There's more upside there. There's fewer risks, and it's a growing sector. So, short answer, absolutely. Like the capital markets are growing significantly, and as that continues to happen, companies like mine are going to get access to cheaper capital, which means we're going to be able to give people like you lower rates, more competitive rates, which will drive down the cost of borrowing against Bitcoin and just make people want to do it even more.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because MicroSeed is not selling the washer. MicroSeed is selling the device that stamps the washer. You get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.